Today, I'm excited to welcome James Lavish, author of the Informationist newsletter and co-manager of the Bitcoin Opportunity Fund. Welcome to the Bitcoin Edge, James.
Well, thank you for having me, Paula. You're all dressed up. I'm in my, t-shirt and VC vest here. So, but
I
we're
love it. Well, your words speak for themselves.
thank you.
Before we get to Bitcoin and macro, just tell us a little bit about yourself, where you were born.
Yeah. Well, for those who don't know, I'm in Nevada, but by way of Texas, I lived there for about 20 years. I'm born and raised in upstate New York, so near the Albany area, and I spent a lot of time in New York, in Boston, playing hockey. For those who don't know, that I was a hockey player, and then when I got hurt, my career ended. I ended up going to New York City and working. My first job there was actually, long story short, I was planning on playing professionally, or at least semi-pro. I was drafted by the Boston Bruins and had gotten effectively traded to New York Rangers my senior year of college. And so right after I graduated, and I hurt my knee, and so all my plans evaporated in an instant. I blew out my knee, and it was pretty much the end of it. I knew my career was over. So, but I was in New York. I tried to make it work. It wasn't going to work, and so I stayed in New York City. And my first job was on the floor of the New York Stock Exchange. I was trading something called ADR arbitrage, where because I was pretty good at math. And so even though I didn't know what my career was going to be, I'd lost my identity completely. Really, I had no idea what I was going to do. I dabbled in the idea of going into law, but that didn't really come to fruition. And I had some former hockey players and friends who were on Wall Street, and they said, "Well, come see what we do. I think you might like it." And it was it was in the sales and trading world, in the institutional investing world. And of course, it was fast paced and intense and high pressure. And it kind of felt like being in a hockey game. All the eyes are on you, and you've got to make the right decision. If you don't make the right decision, you've got to recover from it quickly. It just felt like the same thing. So it wasn't, I was already always outside my comfort zone, being in front of crowds and playing hockey and all that. So this was not anything really new, but obviously it was a little bit more important that you had people's money on the line, not just your team's, win-loss record or whether you're going to go to playoffs. So anyway, I stayed in New York. I got hired on the floor of the stock exchange to trade ADR arbitrage, which is just taking foreign shares and translating them into a basket, effectively into an Americanized share that you could trade here. But there's an arbitrage between that foreign security that's trading on the foreign exchange versus the U.S. security that you created that's trading here. And so we traded around that for our own books and for our customers. And so, and that was what I was doing. That's my first job. And then from there, I ended up getting hired by hedge funds, and eventually got hired by a growing hedge fund in Fort Worth, Texas, and end up going to Texas. And I spent over 20 years there. So really, if you look at my life, I'm more Texan than anything else. Both my kids were born in Texas, and they're still in Dallas. And so, even though I'm a hockey player from New York, I've got this heart of Texas in the middle of my career and life here. And now I'm just keep migrating west. This is probably about as far west as I'll go.
Well, you call yourself a reformed hedge fund manager on your X. Tell us why you're reformed.
Well, I poke a lot of fun and criticize the system quite a bit on Twitter, X, and talk about how the system is imbalanced. It's really skewed to help a certain minority at the very top. The Cantillon effect, or the Cantillon effect, if you're French. And hedge fund managers typically fall into that category of benefiting from this corrupt system. They don't see it that way. I didn't see it that way. It's just, it's just the way the system is set up. It's how the incentives are set up. And if you can benefit from that, then why wouldn't you? It's a survival instinct, right? So you're going to go and you're going to make money, do as well as you can for you and your investors, and the way that the system is set up. The reformation comes from really pulling back and understanding just how broken and corrupt the money system is. And that's important. And it's important to understand because as a Bitcoiner, that's becoming a Bitcoiner and understanding just how perverse the rewards are in the current monetary system. It makes you understand that you weren't one of the good guys. And even if you don't, and I look back and I don't have any ill will for any of the people that I know that are still in that industry. They just don't see it the same way anymore. Or they don't see it the same way as I do anymore. And so I'm reformed in that I look at this system and I look at the world of investing, and I'm trying to teach people how to manage their way through this and navigate through this so they don't get hurt by it. And that's where the Reformation comes. So,
Well, I think that's why a lot of people really like you, because you were obviously doing very well, but not feeling so good about it because it's really hurting people who don't understand.
yeah. We did well for the people who invested with us. But the system itself does not benefit everybody. And so, yeah, and I try to teach. And so education is a big part of my life now, in teaching people about these things, teaching people about inflation, and teaching people about investing and protecting their assets and hard monies like Bitcoin, and how to keep up with the system in order to make sure that their hard work, they can benefit from it in the long run, and not just always be on a treadmill until literally the day they die. And that's the point, is to make sure that everybody is protected and understands that.
Tell us about your personal Bitcoin journey.
Wow,
How did you get to Bitcoin? I know
yeah.
you always talk. We're going to get to the debt spiral, but I'd love to know how you got to Bitcoin.
No, this is good. So it's a bit circuitous, right? So back in about 2017, I remember my wife. I come home from work and she's like, I listened to this great podcast with Tim Ferriss. I was like, oh, Tim, and I don't know Tim. He went to Princeton though, so that's a strike against him. No, sincerely though, he's great. He has incredible guests. He's really good at drawing people out and exploring different worlds that we may not be thinking about. And so she said, I listened to this podcast and he was on there, and I don't know who he had on. I still don't know who it was. I'm guessing it was probably Peter Thiel or something, but, and they were talking about Bitcoin, and she said, there's this Bitcoin thing that I think is going to be important and we ought to be checking it out. And you remember it's 2017, well, you can tell me about yours a little bit after this, but if you remember 2017, 2018, it was like, it started becoming Bitcoin mania, and the price eventually traded all the way up to $20,000, and everybody was asking, should I buy Bitcoin? And I just kind of ignored it. I thought, this is just a fad. It's a tulip. It's one of those things. Digital money. We already have digital money. I didn't look into it. I just dismissed it, and that's all on me. And unfortunately, I wasn't open to the idea. So then fast forward a couple of years, actually it's maybe a year and a half, and I had some discretionary capital that I wanted to invest. I revisited this Bitcoin thing that my wife had been talking about. You hear it here and there. And so I thought, well, I'm going to dig into this. I want to understand it a little bit better, because I want to go out on the risk curve. I had, I'm in a hedge fund. I've got private investments. I've got venture capital. I've got my stocks. I've got my IRA. I've got my retirement stuff. And so I wanted to go out on the risk curve a little bit and do something different. And so I looked at a bunch of things, and Bitcoin was on that list. I was like, there's something here. There's something here, and I need to check it out. Being an institutional investor, being on Wall Street, even though I was in Dallas at the time, technically all of my context on my world is in Wall Street. I started asking people, the experts in my world about it, and it's a technology. So I talked to the technology experts, the technology portfolio managers, the analysts on the street, and every single one of them said, you can, buy some, but it's really just a lottery ticket. It's a flyer. It doesn't have any inherent value. It's worthless. It's a Ponzi scheme. It's going to eventually go to zero. So for a trade, maybe, but other than that, I wouldn't even bother with it. So, I ignored it once again. And unfortunately, at the time, the price was about $3,500. It had already gone up and fallen back down. And so I didn't buy it, and I ignored it again. So now, flash forward to the pandemic and the second round of just gargantuan money printing, and stocks and bonds and everything around us, real estate, everything was just skyrocketing. And I have left my job at the hedge fund, and my son, who is at the time, he's a sophomore at Cornell, and so he was surrounded by a bunch of very smart guys who were computer science engineers or statisticians, and they were all into this crypto thing. And he said, "Dad, I think you ought to go check out this crypto thing, because there might be something for you to build around that for a career and investment and all that." So I was like, okay, I'll look back at it, because you're hearing it everywhere now at this point. You're hearing about Bitcoin Cash, and Ethereum, and Solana, and so I started looking back into it, and I bought a bunch of things. I bought some Ethereum, and I bought a little bit of Bitcoin, and I bought Cardano, and I started. And this is what you do as an institutional investor. You do what's called legging into a trade. And so I leg in by getting a little bit, which forces me, now that I've got capital at risk, forces me now to really go do the research. And this time I was like, okay, I'm not going to go back to the same avenues I was at last time. I'm going to go start reading white papers. I'm going to listen to experts on the stream. I'm going to watch YouTube videos. I'm going to find the right Medium and Substack newsletters that are talking about this from experts who are in the field, who that I can trust. And so I started doing that. And the more and more research I did, the more and more I read, the more videos I watched, the more I saw Michael Saylor, honestly, the more I saw the Hodgkinsons and the Vitaliks of the world, I realized, oh my God, all this stuff is just a scam. And the only thing that really makes sense is Bitcoin. So I moved all of my money. It took me I want to say 4 or 5 weeks, took all of my money and that I had invested and put it into Bitcoin, and really started digging in. And that is when I started. I just watched as many videos, as many interviews as I possibly could with people who had been in the space for a long time. And the thing that made it click was there was an interview that Anthony Pompliano was doing with Jeff Booth. Now, I didn't know who Jeff Booth was at the time. He's a good friend now, but at the time I had no idea who this guy was. And I was supposed to be helping my wife cook dinner. I usually am the one who cooks anyways. So, and she's like, "What are you doing in there?" And I'm in my office, and I've got my laptop, and I bring it over to her, and we sit down in the corner on the edge of the bed in the master bedroom, and I'm like, "You've got to see this. This is crazy. Like, this guy is so smart, and it's making me understand this so much better." Like, what? And I rewound it, and we watched the whole thing through, almost an hour. And at the end of it, she looked at me. She said, "Do we own enough?" So, and really, what had happened was I was trying to put it all together and understand. Well, okay, so I get why we need a better store of value. I get how gold is broken. I get how there's too much paper gold out there, the derivatives, and it's been manipulated for so long. However, long-term, gold has done a tremendous job of retaining value for you. And I understood that inherently. I understood if you had an ounce of gold, you could buy great toga, and then, flash forward a few thousand years, and you can buy a nice suit. You can buy a nice suit at the beginning of the century, nice tailored suit. Now you can take that same ounce of gold and get a designer suit. It's all like it kind of makes sense over the long period of time. So having a good store of value, a digital store of value, that made sense to me inherently. But why Bitcoin? Why now? What separates it? And so Jeff talked about the incredible advancement of technology, and how technology it's deflationary. You're getting so much more for so much less energy output. With technology, you're getting a lot of output for a lot less, a lot less cost, a lot less energy, a lot less, should be less money. And that's on one side. So that while that's happening on one side, on the other side, you've got the monetary system, which is the fiat system, which is no longer tied to gold. We got off the gold standard in 1971 under Nixon. And so now it doesn't have anything to anchor it. And so it's just being inflated and inflated and inflated, meaning it's being debased. The dollar's being made worth less. They're printing more of it in order to continue this debt, expansion. And so the powers that be, the Congress, the Treasury, the Fed, they have to find a way to keep that charade going. And the best way is to just debase that dollar. So you've got this deflationary force of technology fighting this inflationary force of the central banks. And it's not just here, it's everywhere around the world. And eventually they're going to collide. And we're watching it happen in real time. And that made it click for me. I was like, okay, this is why Bitcoin, this is why it makes sense. You need something to anchor your money to. And Bitcoin can be that. It can be the anchor, and eventually it will be the money that people use as the medium of exchange. But it finally all came together, and I was like, okay, this makes sense. I've got to start doing even more research on it, dig even deeper, do my 100 hours, turn that into 1,000 hours, turn it into 10,000 hours. I really want to understand this. And so that's where my journey in earnest truly took off. And I've been dedicated to learning more about it and teaching people about investing in finance and the monetary system ever since. That's a long answer to a simple question, but that's my Bitcoin journey.
I love that. I love that your family sort of orange pilled you, and then Jeff Booth was part of the journey because he's one of my biggest influences. Well, he is, I would say. And I have a question about him, what I was going to
Yeah.
ask later, but I'm going to ask it now because I've watched you both a lot. And so Jeff
Yeah.
says the state of the free market is deflationary. Like you said, it's not compatible with our current system. So what Jeff said to me is that they really cannot exist at the same time. And every time we invest in the fiat system, we're making it stronger. So if I go buy Tesla and if I go buy other cryptos, I'm actually making that other system stronger, which I get that. And I
Mm-hmm.
want to live as much in the Bitcoin world as possible. But do you also agree with that?
So Jeff Jeff is fantastic. And like I said, good friend of mine now. Flash forward into the future, I've been on stage with him in conferences, talked to him at conferences endless times. So Jeff has a gift of removing himself from the current state. And it's almost like the ability to, astro project, right? Where you pull yourself out of your physical being and you can see what is around you, like physically, like you can see yourself. He has that ability to do that in this system that we're all operating in. So he's able to pull himself out and say, you can't look at everything with your frame of reference being in the current system. You've got to pull yourself out of that and look at it from the reference point of a new system, a better system, and that's the Bitcoin standard. And that's great, and of course I agree with that. The problem is, and he knows this, and the issue is that we're still in a world that operates on fiat. So it's very difficult to extract yourself completely from that. So Michael Saylor would say, look, go make as much money in fiat as you can and turn it into Bitcoin, because the system right now is in fiat. So mine fiat, turn it into Bitcoin, buy Bitcoin with it along the way. Okay, great. Some other people would say, look, I'm not some other people would say that they're not, shit coiners, that they're buying these other cryptocurrencies and they're trading them in order to make money to put into Bitcoin. I know some of those people. Is that bad? I mean, it's a casino, those are mostly casino. I do believe that some of them will have some value in the future. I don't know which ones and how, that all shakes out. I do think some are scams for sure. I mean, no, there's no question. Most of them, the vast majority of them are scams. Some will have some inherent function or value in the future. It's just the way it is. Whether they become built on top of another layer of Bitcoin, who knows? But the point is that, we're in a system currently that you're trying to extract yourself from and encourage people to go into this new system. But the world's not quite ready yet. The world's going to have some growing pains there. So the way I see it is that we have, I've done this before in working in a hedge fund, where you have a back office system that does all of your operations and accounting, and you've got a front office system that is doing all your trading and all of that. Well, if you want to change your back office system, that, the last thing you want to do is, set it all up and then flip a switch and move over to that new system. I mean, it's asking for problems and aggravation and agony. What you'd rather do is have the new system, get it up and running, and then run it concurrently with the current system as you make sure that everything's working properly, and then you can move over to this new system fully. So there are a lot of Bitcoiners. There are some Bitcoiners, let me rephrase that would like just to burn it all down, start everything over, and get on a Bitcoin standard now. Let the fiat world implode. Let everybody figure it out. But as far as I'm concerned, I've got my Bitcoin. They can figure it out themselves. They're too stupid to get on the Bitcoin standard. That would be very painful, in my opinion. I think that would be, there'd be a lot of heartache. There would be a lot of disruption. There would be a lot of people who are destitute around the world if we did that. And that's not really my vision. I would rather move over there gradually, get to the point where Bitcoin is the ultimate store of value globally and recognized that way. And then eventually, once it does that, eventually it just starts to win people over, where they realize this is so much harder money than fiat. Why would I be dealing in fiat at all? The moment I change my Bitcoin into fiat, it starts to evaporate on me. So that's kind of the way I see it. I see it as eventually we'll get there. I think it's a long-term, it's a very long-term view. It's not going to happen in the next 3 to 5 years. Decades, maybe in my lifetime. I would bet, I'm betting everything that it happens in my kid's lifetime. And, but that's the way I look at it. And I think overall, we all kind of have the same opinion. It's just a question of how it occurs and the timelines around it.
Yeah, and because there's not high adoption yet. We know a lot of people in Bitcoin, but not most people aren't seeing what we see yet, because that's a very cloudy world, right? And that's what you're great at. Tell us why Bitcoin. Tell us a little bit about the problem with the debt spiral, inflation, and why
Yeah.
we need Bitcoin.
Yeah, for those who have not heard me talk about the debt spiral yet, I'll lay it out very quickly and succinctly for everybody. If you have heard it, you can fast forward a couple minutes. But so the debt spiral is really it's where we're built on this. We're Our foundation has been changed. We're now the entire financial system of the world is built on debt, borrowing, extracting future value into the now. Now, debt in and of itself is not a bad thing. If you want to do something and you want to be productive, you may not have enough money to do that now. You may have to go get so say you want to set up a business, say you want to set up a restaurant, is the example I often use. And, you've got $10,000, but you need $100,000 to open this restaurant in order to, get the space. And it's actually, this day and age would cost a lot more than that, but let's just pretend. You get the space, you get the cookware, you get you build it out, you hire people, you start paying salaries, you get the food, you start making the food. You need a lot of money up front to do that. If you only have $10,000, well, maybe you can go get a business loan, a small business loan to open that up. Well, what you've done is you've borrowed effectively the rest of that money, the $90,000. And now, but you're out there, you're being productive. You've bought things, you've built things, you've hired people, and now you're making food and selling it. You're generating now profitability, gross domestic product. You're generating, productivity. So as long as you do it in a way that is responsible, it can be very useful. We all use debt. I mean, this day and age, I would not be the one loaning people money at the current rates, because I know long-term inflation, you're going to get roasted and you're going to lose. So you want to be the one borrowing. What is the U.S. government doing? They're borrowing massive amounts of money. Okay, so but they're doing it irresponsibly. They're way over their ski tips. Now the U.S. as of yesterday, they borrowed $204 billion in the first day of this fiscal 2025 year, and just saw that last night. Insanity. 300 something billion dollars in just a few days. Absolute madness. They're running multi-trillion-dollar deficits at a time that we're not even in a recession. So this is just completely irresponsible, reckless spending coming out of DC. There's just no other way to put it. Okay. Now, but to put numbers around it for people to understand and why this matters, if you're a company on the New York Stock Exchange and you can't generate enough income to cover your interest expense, and you have to borrow in order to cover that, you're called a zombie company. You're a dead man walking. So the United States is effectively a zombie company if it was on the New York Stock Exchange. The difference is we can print our own money, which we'll get to in a minute. Companies can't print their own money. So that's why they're not a zombie company. They're kind of just a zombie country, and we're just continuing this charade. What's the charade? Well, if you look at the Congressional Budget Office, the line items and what we expected to spend, we're going to get all the facts and figures out in the next month or so of exactly what we spent and exactly where all our money went and how much we took in. But just using the numbers that they projected this summer, we projected, and I'm off the top of my head, we projected to spend $6.9 trillion, right? And that's all the expenses we have in the U.S. government federally. And we expected to take in $4.9 trillion of tax receipts. Okay, so now you're talking about a $2 trillion deficit. Okay, so where can we cut? So the thing is, the problem is, Paula, is that we spend money on things that are unnecessary. That's part of the issue. But the problem is, we have mandatory expenses that completely overwhelm our tax base. So what do I mean by that? Well, our mandatory expenses, if you go through them item by item on the mandatory expenses, you've got things like Social Security, Medicare, and Medicaid, right? If you look at all of those, they add up to roughly $4.1 trillion, right? So Social Security, Medicare, and Medicaid, $4.1 trillion. Then you've got defense spending. Those are signed into legislation. They're in law. You've got to pay them. If you don't pay them, you're defaulting on your debt really bad. Then the second item you've got is defense spending, which is somewhere around $950 billion that they said. I think it's close. It's over $1 trillion. They're places that they're pulling money from and sending to Ukraine. Who knows how much they're even attributing to defense spending at this point. Is that defense or is that aid? What is that? I don't know. But defense spending is about $950 billion. Okay. So now you're at $5 trillion. Okay. So you're already spending more than you're taking in right there. Those two line items between Social Security, Medicare, Medicaid, and defense, you're already at $5 trillion. You're overspending. But then we've got our interest on our debt, and the net interest on our debt is about $1 trillion. It's 900 something million dollars. That is all the interest expense that we have on the debt that's out there, the $35 trillion of debt that's out there, 35.6 trillion, minus the interest that we get back from intergovernment loan, the debt, right? So you've got intergovernment debt. So, it's basically just paying yourself interest. So they net it out. And it's about $900 billion. So now you're at $6 trillion. Then you've got discretionary spending of another $1 trillion. Now you're at $7 trillion. So your deficit's over $2 trillion, 2.1, $2.2 trillion. We don't know the exact number yet, but I think it's going to be close to 2.3 trillion. Okay. So what do? You can either cut expenses. Where are you going to cut it from? You can cut all of the expenses out that are discretionary and you're still underwater. You can cut all of the defense spending, but with interest, you're still underwater. So you're going to have to do, even if you could cut it all, and even if you got Congress all together and said, we're going to cut expenses, it's political suicide. Neither party will do it because it hurts their constituents, hurts them, right? They need to keep the gravy train going for their constituents, the people who vote for them. And so they're just going to keep spending. There's no real incentive. They try to trick each other every few years with the budget deficit and the budget battles and the debt ceiling, which we're going to see again here in January, but nothing really happens. So what's the second thing you do? You could raise taxes. If you've ever seen something called the Laffer curve, this is Arthur Laffer who created this something called the Laffer curve, and it was a big part of Ronald Reagan's platform and cutting taxes. And so what happens is in the Laffer curve, you see taxes go up. As you raise taxes, the tax income goes up, meaning the taxes that the government gets goes up as you raise them. And at a certain level, it stops going up. As you raise taxes up to a certain level, it stops going up. It starts to go down. Why? Because productivity goes down. You're disincentivized to be more productive. Not just because, I don't want to pay taxes, I'm not going to work. It's because you don't have the extra capital to put into productive lines of the goods that you're making, productive lines of business. You can't put money into research and development. You can't hire people. You can't raise wages. So all of this starts ebbing and you go down. So now you have declining productivity and you wind up getting to the same spot of higher taxes on lower productivity. But the problem is now you've got declining productivity. So it's even worse. So that doesn't work. So what's the third thing you can do? Well, the third thing you can do is just borrow more, just issue more debt, which is what we do every single year. Here's the caveat though, because like I said before, we're fiat based and we issue debt in our own currency. What we do is we allow for inflation, and that because we print money continuously, whether it's through deficits or it's through central banks monetizing debt, or it's through just sending people stimulus checks, we print money. And so that inflates the money supply, which devalues the dollar. And so as the dollar debases, it makes that debt that you pay off, you pay that former debt off with cheaper dollars in the future. So as long as those dollars are debasing faster than that interest rate, annual interest rate you're paying on your debt, then you're making out on that deal because you're loaning money at an interest rate that's lower than the inflation rate, the true inflation rate. And so it's a negative real return for the investor in the bond. and it's positive for the person who's doing it. So it's positive for the government because they're paying down the debt with cheaper dollars. And that's the game. And we're going to continue doing this. The only problem is now we're paying so much for interest expense and our deficits are running so high that we have no choice but to keep borrowing more. And as we borrow more, interest expense goes up. Even when the Fed pulls interest rates down here to 3% this next year, our deficit's still growing because our interest expense is still growing right through that, because as these bills, that the average debt comes due and matures, we have to issue more debt. And we're issuing it at a higher interest rate, even at the longer end of the curve. So interest expense is still going up, and that'll continue for a few years here. And even if we go back down to zero eventually, it's going to continue for a while here. And our deficits are still rising at the same time that we're having to have larger payments of Social Security, Medicare, and Medicaid. And these are bills that are coming due, and you're getting more seniors and more boomers who are retiring early. We saw a ton of them retire early the last couple of years, and they're still doing it. And so the cost of living adjustments are going up. The Social Security, Medicare, Medicaid payments are going up. The Social Security fund is being depleted. By the time I retire, there's going to be nothing in it. There will be nothing left for me, even though I paid into it all these years. I'll have paid into it for 40 years and I'll get nothing out of it unless we do one thing: print more money, borrow more money, just tack it onto the bill and make the future generations pay for it. And so what's happening is it's a debt spiral. So you have to borrow more to pay more, to borrow more creates larger deficits, to borrow more to pay more, and it's spiral. And everybody knows it. It's confounding that we're not talking about it on the presidential debate stages. It's absolutely mind-boggling, but everybody knows it. We have certain congressmen and senators who talk about it. A few of them that are in the Bitcoin world, like Senator Lummis, they talk about it. And John Deaton, who's taking on Elizabeth Warren up in Massachusetts, he's talking about it. But there are not a lot of and Kennedy is talking about it. Senator Kennedy is talking about it. But that's it. There's a handful of people. But everybody knows it. And when I mean everybody knows it, I mean everybody knows it. Janet Yellen has said it's unsustainable. This path is unsustainable. We have to cut our spending somehow. We've got to stop. We've got to figure it out. We've got to balance the budget. She said it. Powell said, I don't comment on the Treasury. It's not my place to tell them what to do. It's not my place to tell Congress what to do. My job is to keep the monetary system going and keep confidence basically in the US dollar is what his job is. He doesn't say it as much, but first principles, that's his job. Okay, so and we can talk about what the mandates of the Fed are separately. But the issue here is that they know it. The Treasury knows it. Not just Janet, but the Treasury knows it. They put out a report that shows, the Congressional Budget Office shows it. They put out reports that show that the debt to GDP is moving up exponentially. In the future, starting now, it's just going up exponentially, and they know it. And they put out a report that's it's subtitled "An Unsustainable Fiscal Path." The Treasury themselves put this out for the whole world to see. It's on a graph. And then the CBO says the same thing. They show this report of debt to GDP just rising exponentially. And here's the crazy thing about it, Paula, is that the CBO, and they're all using numbers and assumptions that don't take into account high inflation. They don't take into account any higher deficits. They don't take into account recessions. Like as if we're just going to keep going on forever without any recessions. The only way we're going to do that is if we keep printing more money. And so we're just going to keep printing more money, making inflation worse. So this is the whole point of talking about this. This is not about doom and gloom. This is about waking people up to understand that we are in a debt spiral. And the only way that our leaders are going to handle this is by expanding the money supply. Fiat must be expanded. It's the basis of all this debt, and it must the show must go on. And they're going to keep printing money, which means that you need to have protection for yourself against that. And that's the point of all the things that we talk about. So it's not doom and gloom, but it's a warning sign that this is not stopping. And unless we see some sort of resolution here and a change of heart of everybody in the world, that we're going to be responsible now, which I do not expect, then the answer is to own things that are hard assets, hard monies, gold, silver, Bitcoin, real estate. Own things that cannot be debased, and that's the point.
Well, that's a great explanation, James. You know, what you're saying is the debt is pretty much insolvent because it is political suicide to make those three changes that you mentioned. So most likely the money continues to be printed, which we know it always has. And you say everybody knows it. And I think more and more people are seeing it because we see that our deficit has gone to 35, 36 trillion. And, my brother-in-law said to me the other day, it's going to be 50 trillion soon. I said, yeah, that's why we buy Bitcoin. He said, great. Are you going to sell it at 100K? So, that's people see it, but I don't think everyone knows exactly what it's going to mean.
Yeah, no, they don't really understand it. And when I say that, one thing we didn't even talk about, and this is just mind blowing, is that you've got unpaid liabilities. So we talked about the debt, the $35 trillion of debt. But if you look at Social Security, Medicare, Medicaid, for everybody who's alive right now, the unpaid liabilities into the future for everybody who's just alive right now in the United States and in the workforce, the unpaid liabilities on that is $175 trillion. $175 trillion. And that's unpaid, that's unaccounted for. They don't have it. So where's that money going to come from? Now, of course, with inflation, that's going to look a little bit different, but there's no way around this. There must be more money printing. There's absolutely no way around it. So do you sell your Bitcoin 100,000? It's a good question. It's a great question. I would say I can't, and this is what I tell the people that are my friends, colleagues, I cannot advise anybody individually on what to do. I just don't have the capability. I could if I took them on as a client, worked up with them on one-on-one, but I don't know anybody's situation. So this is not financial advice for anybody. You must look at your personal financial situation. As we talked about before, we exist currently in a fiat world. I do believe that will change in the future, but at the current state, we exist in a fiat world. So what do you need? How much do you need cash flow wise? How much do you need for your mortgage? Mortgage payments are going up. Insurance prices are going up. Like, how much do you need for these things? Bitcoin is super volatile. Over the long period of time, it tracks the money supply. We've seen reports and studies about that recently that show that in great detail over a long period of time. Short period of time, it's super volatile. If you go back and look at the price of gold, and the amount that it fluctuated during the Weimar Republic hyperinflation and meltdown of that currency, you can see that gold does this all the way up. Yeah, it held in, and it followed ultimately to protect you from that hyperinflation, but it was super volatile during the same time. It's the same thing with Bitcoin. It's super volatile right now. It's going to continue to be volatile, in my opinion. And so you can strategically take advantage of that volatility if you want to. You have your base amount that you want to have forever, and you wouldn't be upset if it got away from you and you weren't able to buy back in, that you would have what you have. But, if you are renting, you don't have a house, or you are trying to have a family, you want to move to a certain place and you want to take some of that Bitcoin and it's traded up to 180,000, and you want to sell some of it to buy something else that's hard. I don't see anything wrong with that. I just personally wouldn't want to sell all of my Bitcoin. I would personally, I would like to have a core amount that I'm going to hold on to forever. So, but that's me. And I'm not looking for cash flows from it. So we're looking, to meet needs from it right now. it's definitely up to the individual, but I do expect volatility. Now, trading around that volatility, that's going to be hard. One of the things that I've said before, and I've looked at studies about this, is that if you look over Bitcoin's history, like I think 90% of the positive moves in Bitcoin come in just 10 days a year. So you don't want to miss those 10 days. They're not all stacked against each other, but the positive movements do come in just a few, like you can't miss those 10 days. So that's just reality.
And we don't know exactly whether it's going to follow the same path as before. For
Right.
15 years, it has followed those cycles.
It's a
Yeah,
small data set though.
yeah, that's
I mean,
true.
it's just a few, it's a
Yeah,
small data set.
but I've
Looking
heard
at
I
regression values over a long period of time, looking from 2009, looking at regression values, that's a little bit more helpful. Nothing's perfect, but it's definitely more helpful.
Well, I think that's a good way to look at it. Is that I'm not a great trader, so I'm going to keep a certain amount of my Bitcoin, but I am going to look at my expenses and what I want, and of course we have to live. So if I need a house, I'm gonna do that.
Right.
And I've heard you talk about, we've had a very long, boring 6 months, but do you still expect Bitcoin to do what it has done in the past?
Well, I mean, look, we're in an election year. We've got massive deficits. We got the Fed cutting rates. You've got unemployment numbers that are holding in. You've got we just got numbers from the the ISM numbers that are showing, the services industry, which is just roaring. We've got conflicting data with a Fed that's easing. But at the same time, I just saw that the repo rates kind of spiked last night over 5%. That's something that's concerning to me. That could just be companies just reposition themselves here at quarter end. I don't know. Or beginning of the quarter, like it's hard to tell around month end, quarter end periods sometimes, especially around tax season. So, so it's hard to tell. But I would say that I expect long term, yeah, Bitcoin's going to continue to consolidate here. And when it's done consolidating, and we get out of this period of uncertainty. I mean, we've got geopolitical uncertainty. We've got two proxy wars that we're involved in, with the possibility of one of them turning into a world war now with Iran and Israel. You know, that's great uncertainty. Where does oil go? Are we going to attack Iran's oil supply? Like, what does this do to? You saw oil spike by 4% this morning with just uncertainties. Long term, I don't think that holds, but you've got that going. You've got this election going on. We've had the last two elections were essentially contested. One was contested by Hillary, and one is contested by Trump. Clearly we have irregularities in voting and in counting votes. How this plays out, who knows? When whoever wins is going to be announced, and when or where or how or it's certified, I don't know. That's uncertainty. And that means there's uncertainty in the amount of deficits we're going to have, the amount of regulation we're going to have, which means that you don't know which companies to really invest in the stock market, because smaller companies would do better with less regulation, and they would do much worse with more regulation, like we've seen with the current administration. And then you've got these absolutely like insane policies that have been floated by Kamala about taxing unrealized gains, raising the capital gains taxes. Like, who knows? Like, that would be a flight of capital from our markets, and they would go into other assets that wouldn't be here. So that's an uncertainty. Do we get a split Congress? Do you get a president that doesn't have control of the Congress? And if that happens, then it kind of calms a lot of things down. If you have a Trump presidency that sweeps Congress and you have all Republicans in, well, you would expect a lot of tax relief and a huge windfall from regulations being cut. It looks highly doubtful that you get a full sweep of the Democrats. So if you did, it would be the opposite. But you would have massive spending, I would expect. And so, but if you get gridlock, that takes out a lot of uncertainty. It's just a little bit of more of what we have. You may get certain things done here and there that are positive or negative from either president. Who knows? So it does matter. It does matter. This election is going to be impactful.
But either way, they're going to print money.
But either way, well, you saw the math. It's just math. Nobody can outrun the math. And so it's just a question: are they going to decrease regulations to get more productivity, or are they going to increase regulation and waste money on certain unproductive green energy initiatives or unproductive expenses that we're just sending money around the world for wars that we're proxy to, that we're not really part of? That's not really productive for us. Though you could argue that it's productive for the defense contractors, and it likely is. So, but it's hard to tell. A lot of that is hidden. So yeah, either way though, they're going to print. They're going to print money. The monetary system is the way it is. The incentives are set up the way they are. And I expect that we will have an expansion of the money supply and eventually more inflation, especially asset inflation, which is good for Bitcoin eventually, no doubt about it. And so, I don't like giving price targets. I hate it. But do I think we're going to be in price discovery mode in the next year, meaning above the last all-time high? The answer is yes. I do believe that eventually. Whether or not it's before the election, who knows? This is going to be a long few weeks, and then we'll see how it shakes out.
What else have you learned from Bitcoin?
The things that we didn't talk about is the humanity that is around the humanitarian aspects of Bitcoin, helping people store their money and get away from places that are oppressive, either from oppressive regimes or oppressive financially because of hyperinflation. Talk about Zimbabwe. Zimbabwe, I just read, it's come to light that they haven't backed their current currency with enough gold, and so they're going to have to devalue it, as well, from what I understand. Again, that's just more corruption or incompetence, or maybe both. And so, how do you escape that? If you're in there and you're saving your money in the Zimbabwe currency, you don't want it in a currency that's super inflationary. Argentina is fixing things, but we've seen over the years, Argentina, Venezuela, Egypt, Lebanon. We've seen places that have high or hyper inflation. And so if you're in those areas, you want to protect your money that you've hard earned and you're saving. That's one thing. That's part of it. But I've also seen it help people escape oppressive regimes and get away from oppressive governments. And they do that by turning all of their assets into Bitcoin and walking across the border with nothing on them. All you've got is 12 words in your head. And if you know those 12 words in your head, it's not that you're taking Bitcoin anywhere with you. It's that it's following you wherever you go. It doesn't matter where you are. Bitcoin is global, and it's protected on a global network. It's not in a wallet. It's not in your phone. It's not on your bank account. It's everywhere. And so it can help you escape an oppressive regime. I've seen it help women, a few people I know, escape abusive relationships. And so, it used to be that you'd have to find a way to get money out of a bank account and move it into and sign leases or whatever you have to, and buy things quietly, secretly, whatever. Whereas now, it's helped people that I know take the money they've earned, put it into Bitcoin, and have it waiting for them wherever they end up leaving to escape to. And so it's something that can help all of humanity, and even the playing field, where you're not beholden to a corrupt monetary system that oppresses you every single day.
Yeah, I love that about Bitcoin. As you know, I'm from Zimbabwe. My family lives there. And on this channel, I've spoken to a couple of people from
Mm,
Zimbabwe. And just to give you an idea, most people there make less than $200 a month. So, and I've
mm,
heard Preston Pish say, in order to be in Bitcoin, you need to be a net producer. And that is true, right? I don't know if I'm saying that right. You need to make a little bit extra. But these people that I spoke to
you need to
are
be a net
making it
saver. Yeah, you need to
net
be a
say,
net
yeah, you
saver.
have
Yeah.
to have a little bit of extra, a little bit of discretionary income. So they have a hard time with that. But even the
Sure.
people in Bitcoin in Zimbabwe understand that most of their problems are coming from a broken money system, and they see it, and they're spreading the word, and it's getting out there. So I have a lot of hope.
Great. Yeah, Bitcoin is hope. I do too. And
Yeah.
if I, we talk a lot about like, and we were talking about doom and gloom and negativity, but it's not. It's just I want to help people wake up and see what's going on around them, and that Bitcoin is hope, and you can trust it because you don't have to trust it, and that's the beauty about it. You don't have to trust it. It's inherently trustless, and that's what you want. You know, verify. You verify
And
it.
do you
You don't have
think,
to trust it.
yeah, trust but verify. Do you think, James, that this is now part of your purpose? Is this now your mission? It's
Absolutely.
changed your life, right?
It's absolutely changed my life. That's why I have on there that I'm a reformed hedge fund manager. I do believe this is my mission to help people, navigate through this difficult system that we have, and it's going to be a difficult time, I think. But as many people we can get to understand it, the better.
And buy a little, even if it's just for as a savings mechanism for now, it's a good
Exactly.
start.
Exactly. The when you ask the question, how much Bitcoin should I own? The only wrong answer is none.
I love that. So thank you so much, James, for joining me today. Tell us where people can find you.
Yeah, of course. It's been a pleasure to be here, and I appreciate you having me on, Paula. We talked about some stuff that we don't normally talk about. I can be found on Twitter, X, just under at James Lavish, like it's on the screen here. And then you can find the informationist is at jameslavish.com. It's on Substack, and it takes one complicated subject, typically financial subject, and I just simplify it for people every single week. And then and I have the Bitcoin Opportunity Fund. So for accredited investors, unfortunately, not my rule, the SEC. You can go if you want more information about what we do there. Our first fund is closed, but we'll likely be doing another one here soon. And it's just Bitcoin. Just go to bitcoinopportunity.fund and request information. We can get you some information about it.
Thank you. And I just have to say, I love your Twitter posts, because what James does is put everything in a very shocking details in a very calm manner. It's quite
I
funny. So
appreciate that, Paula. Thank you.
thank you, James.